This is literally the only video that I believe you actually need on indicators. And going forward, there will not be videos, and there hasn't been in a long time, about indicators on this channel unless it is a tutorial about how to use a specific indicator based off of questions or interest. However, when it comes to indicators, there's a lot of videos out there on YouTube or on social media that talk about this indicator that gets you this win percentage, or this signal, or this indicator does this. This video will be quite short, but is going to actually explain more of the psychology behind it, and then why that's actually more important than the indicators and the stupid ass videos that people make about how this indicator is going to make you profitable and this one's not. I'm going to get right into it. Indicators are not good or bad. I have been looking at indicators and hearing about indicators for over 5 years. And from my experience, which I'll get into more of what I do at the end of the video, but from my experience, labeling this indicator is really good and this one's really bad is not good mentally from a psychology perspective when it comes to trading any way, shape, or form. So like, for example, if you look at the VWAP, the volume weighted average price, and you compare that to the volume profile, we can't say, I don't like the volume profile today because the VWAP's better, or the VWAP is actually more superior than the volume profile, so I'm not going to use this, I'm going to use this. That's all relative to you and your strategy. So when you hear someone say that, they might have data behind it that they can either make up, or they might say, this is what you should do, but that's coming from their perspective. There's a million perspectives, and there's a million ways that you could actually trade stocks, options, futures, Forex, crypto, whatever. And inside of that, there's a million strategies, right, that you can deploy that could use indicators. They might not. It might use this indicator. It might use that one. You see what I'm saying? So there's just so many ways to skin the cat to get to the same end goal of trying to be profitable, that one indicator versus another can't just be labeled, this one's better. It's in the context of your system and strategy, one might be more useful than the other. That's how you should think about it. It's how you use the indicator that matters more than the indicator itself. You could have 37 indicators on your screen and get really confused. You could also have one indicator or no indicators on your screen, and that might work really, really well because you're not confused, or that one indicator, you're able to look at that and say, when it does this, I do this. When it does this, or when it shows me this, I do that. And based off of that, I can build out a strategy and trade off of that, track my win rate, track my risk reward, and go from there. One of the biggest problems that I have been there too, and that a lot of people kind of find themselves in, is attaching excessive importance to one indicator specifically, or multiple indicators in general. Because you look at this thing, or most of the time, there's so many videos out there that do very, very well. I see on YouTube that talk about, this no lose indicator or this 80% win rate indicator. Like, it's just absolute bullshit. But the problem is that people watch that and go, oh my gosh. And so they attach this excessive importance to an indicator, when the reality is that that doesn't matter. That could be, doesn't have to be, a piece to the puzzle in a strategy, but it doesn't actually, it's not the end all be all. Your approach, psychology, risk reward, win rate make more or mean more in the grand scheme of are you profitable or not. So attaching excessive importance to, well, I got to see this indicator do this one thing. If I don't see the indicator do this, then, or show me this, then I can't take the trade because, relax. Maybe that's how you operate. If this, then this. But if you don't track that, you'll never know if it actually works. So if you track an indicator that you use and say, hey, when for example, when I see the RSI, the relative strength index, go below 25, I take a long position with a stop loss at 5% underneath the long position. And if you do that for 6 months and you have a ton of data on that and you find that you're profitable, cool. Now you can keep using that strategy, but you might not find that. And if you don't, cool, we can adjust. Maybe we don't use that indicator, or maybe we just say, hey, when the RSI is below 22 or when the RSI is below 20, for example, then I take a long position. And you can figure out if that would work better over time. In my experience, I went from being the type of person that would throw 37 indicators on the chart, and I would look at a lot of different things. I'd look at the 50 SMA, this SMA, 200 SMA, the 8 EMA, the 9 EMA, the 10 EMA, the 20 EMA, the 50, the 200, all these moving averages, all these stupid lines that made the chart really confusing to look at. And especially as someone who was maybe like a couple of years in, not even till even looking at charts in the first place, that wasn't very useful at all. So I found them to be less useful the more that I added to my charts. And I really kind of dialed into really just using like one or two, and not even really. The only ones that I use personally is the volume profile, the visible range volume profile, and then volume, which are you going to call volume an indicator? I don't even know if you would call that an indicator. So to be honest, they're both volume-based indicators, and they're really not even lines on my chart. I just kind of use them to say, okay, there's a lot of volume at this price, or there's a lot of people buying or selling or exchanging shares or whatever at this price or at this time. And I use that to understand what's happening on the chart. Are we breaking out? Are we breaking down? Are we consolidating? And I use that to build out my strategy and then take my trades based off of when I see high volume on consolidation breaks. That's all it is. So you can say whatever you want, but it's not a lot of indicators. And that's what works for me. And that's how I use them. But it was very easy to attach excessive importance to indicators because I would watch somebody who uses one indicator, I would see somebody else who uses another indicator, and then I would go, oh my gosh, like these guys make so much money, like I definitely need to use those indicators. But the reality was I didn't need to use those indicators. And second, I don't even know if they were really profitable because there's a lot of fake people who post, gains or who post things just to sell you something, and that's how they're making their money versus trading the markets. And so in the end of the day, it doesn't really matter. Like, why am I going to bother, attaching excessive importance to something that I can't even verify if it's actually, helping this person or if it really will help me. That's my spiel on indicators. It would be actually hilarious if I had a sponsor for this video that was like an indicator company or something like that, but I do not. So thanks so much for watching. Maybe leave a like, subscribe, and I'll see you in the next one. Peace.